Hello, swing trading strategy for consistent results using long uptrend line. We are going to use 3 stocks from our watch list to analyze today using long uptrend line swing trading strategy, and the first one is CSL. So for consistent result, you can, if you just start swing trading, you can start with large cap stocks, and those are large cap stocks on my watch list, and they are upward large cap stocks. So with upward large cap stocks, the strategy we are using is to first determine where you can buy those stocks. So by tracing your support lines that are longer than 1 year time frame, you have the date on the x-axis and the price on the y-axis. So by tracing those lines passing by the valleys or the mountains, you can choose some of those lines. You might have multiple sometimes, and you can pick the one that you notice that the price pull back to rest on before start climbing a new mountain. You can select few that the price touch base with a few times at least, that you are comfortable buying the stocks at that level because it's low enough. Those are your entry points. So out of the bag, you select those entry points, and then you estimate your exit point. And the exit point, when you are using large cap stocks, and when you are trading large cap stocks and using long option long swing trading strategy, and you are buying it this low, is to select the next new high as your first exit point. Once you reach that level, you can determine if you want to get out of the trade or if you want to stay in longer. Because with those large cap stocks, they tend to make multiple highs once they leave the support line, the valley line of the mountain, and they breach the previous new high level. They will make multiple new highs along the way, of course, pulling back to a short uptrend lines that is supporting the upside wall of the mountain, pulling back to where to rest and move back up. Sometimes they may not touch base with it, but they will still pulling back and going up, pulling back and going up, and making higher highs up to a certain point before it will decide that is done with that side of the mountain, and will start working on the downside of the mountain, pulling back, making lower lows all the way to the support line again, and that will form the whole mountain. So with our strategy, at least at this time, is to buy at the support line. When they start making higher lows, a sign that maybe it's going down and is getting ready to start going up, to start claiming a new mountain, is to buy after a few higher lows at a first or second green bar that follow a pullback, and to claim it, to stay in the trade until it reach a new high and multiple more before you get out. But buy at the start of that side of the mountain and sell it around the same side of the mountain, but you don't need to stay in the trade until all the peaks are reached, because you don't know when it's going to be done reaching those peaks. So we use for instance, the previous new high, the first one and the last one, to see the time frame between the two. And you can divide it by 2 and use that and say if it's going to repeat the same. Once you purchase it and it reach the first peak, you can start counting the time frame from there to say maybe you can stay in the trade half the time that is based on the previous highs, or 2/3 of the, that time frame, for instance. Additionally, you can try to use the price that it leave that support line and reach the last peak, divided that peak by the support line price to find a ratio, and use that ratio to time when it start leaving the support line. This time, use that ratio to time that price level, and you can set that price rate that when you reach that price, you will get out. And in this instance, we have 481 the last peak, and we have 207 as the previous support line that it touched base with. So 481 divided by 207 is giving you 2.3. So it double that price before it got out. So you have 2.3. So you can take 2.3 times, let's say is touching the price around what, 290, let's just say 294 for instance, times 294, you can say 675 for instance to be your exit point. To be more conservative, you can say, well, 2 times 294 is 588. Maybe when it reach 588, you might start considering whether you want to sell it or not. But again, it will depend on how much you pay for it, because you are not going to buy exactly at the support line, and you might buy a little bit higher than that, or maybe you might get in earlier by buying it lower. You just don't know, because we are not there yet. Today is October 8, 2025, and the price yesterday after the market closed, we are analyzing it after the market closed yesterday. So the price went down. That's why the price is red. The price at the end of the day was lower than the price in the morning. So the price went down. When it comes to CSL, it's going down, but it has now reached our support line to start going up for us to buy. So therefore today it is a no buy. But that is the strategy we are using to have consistent result, so that we can just keep improving that strategy and keep repeating that strategy to have a consistent result in our trade. It's not like one time success, but a strategy that can give us, and you and I, a consistent result. We just keep finding stocks that are well comparable to the strategy to swing trade to reach a consistent result. And with this strategy, you trade less, and it works well when you have a busy schedule, like you have a job, you have a household to take care of. You don't trade often, you don't buy often, you don't sell often. And when you find a good entry point to enter, you will stay in the trade for months. You can see the last touch point was in 2023 May. The last peak was in 2024 October. Halfway, so it's like almost a year and a half. You stay in that trade for a month, for instance. That is a month. It's not days matter. So it's a long uptrend and swing trading strategy, and you are buying it around that support line. It gives you the opportunity to stay in that trade longer. If you get in too early, you will stay in that trade longer before it's ready to start going up. You can see that it stayed there for a little bit, got close to it, went up, pull back to it, went up, pull back to it. So before it was ready to start going up. But once you select good stocks to work with, you don't sell it at a loss. You just stay in the trade. It will be negative in your account. You just leave it there until it becomes positive. and then you just see the stock going up, and then you'll analyze the stocks often to see where you purchase it, where the price is, and where you want to get out. That is, after you have it in your portfolio, you will start focusing on when you want to get out. When you do not have it in your portfolio, when you are doing your analysis, it will be to see where to buy. So DECK, at least with the strategy we are using. Because there is multiple strategies out there, and we are only focusing on the strategy that allows us to buy at the climbing side of the mountain, buy a low, sell a high, and get out. And wait until it comes down again and start going up, and we can repeat the same process. So DECK, we have two support lines that we trace and color code, and we are observing it. So yesterday the price went down. It's going down first. It breached this support line, which is the source was somewhere here. It's multiple years support line, but clearly it breached it, went and rose on this support line that I don't really find to be a stable one, because you only have one touch point here, but is pretty much resting there. So we have this longer support line that we don't know if it's trying to get to that or not, or if it's going to start going up from there, but it seems to be breaching this support line as well. So it's still on the drop, it's going down, therefore it is not a buy. Today we select it, we put red, we mark it red on our watch list so that we know that, you know, is going closer to our buying point. DOV. So DOV, okay, so DOV, we have two support lines, and it touched base with one, went up, pull it back, and start going down. So we, at this point, I'm not sure if this support line is what it wants to use, or if it's going to come down to this. But it seems like let's see, this is the last peak there, and then it pulled back, touch base, went up a little bit, touch base. So I'm not sure if it's, before it start going up, I'm not sure if it's repeating that same, it's going to touch base with it again a second time before it's ready to go up. I'm not sure. But yesterday the price dropped, and again it's in the drop, it's going down, and it's far from either one of the line we like to buy at. Therefore it is not a buy either. So that is how we use our swing, our uptrend line swing trading strategy to do our chart analysis to find stocks that we like to buy. And those stocks, we already took time to select them, to build our watch list, and that is the watch list for the whole year. It's not a watch list for 1 week, it's a watch list for the whole year. And our job is just to keep analyzing the stocks on it to see if one is well positioned for us to buy. And once we buy, we color code it so that we know that we already have that stocks in our portfolio, and we put arrows on the chart to, you know, underneath the bar to show the day we purchase the stocks, and the bar of that day for reference. So, and that way we just, when we are analyzing the chart, we see the, you know, that arrow, we know that that's where we bought it. It does not specify precisely how much you pay for it, it just shows you the dates and the color of that bar. So, but yeah, and I just found that strategy to be more flexible, relaxing, and low risk as for a swing trader to use, trading stable company stocks. And later, if you want to give a try to mid-cap stocks, small cap stocks, to see if you can find some there that are upward, that could be compatible with that strategy, to create a secondary or a third list with of watch list of those stocks as well, so you have a bigger watch list to work with if you have time to analyze them. The goal is to be able to analyze your chart on a daily basis after the market close, or before, or early in the morning before the market opens, to spend about an hour to do your chart analysis. And it's all about how much of those stocks you can analyze very quickly on a daily basis, to go through your list, whatever numbers that list is. It's up to you to find how many you can analyze within an hour, so that it's not a burden for you. At the end of the day, when you are tired, you can still do your analysis, or early in the morning you have time to do it before you go to work. And I found 79 to 80 to be the right number for me to analyze within an hour. Although some days I don't do any analysis, but it's good to do that on a daily basis, so that you keep an eye on those stocks you already have in the portfolio, to see how they are performing, and for the new ones that you have not purchased yet, to keep an eye on them as you are saving money for your next purchase. And little by little, you will just keep increasing the profit you are generating from those stocks that you are trading, and you will be able to calculate the profit rates on them as well. It's all about finding a sustainable strategy that you can just keep applying and have an expectation for the result you will achieve using that strategy. And that is the system that I'm applying and I'm sharing. It's not get rich quick type of strategy, but it's more finding a stream of income, swing trading, and just keep doing the same thing and keep improving it, and to get good at it without risking your hard work money. Thank you so much for your time. We thank you very much for watching our videos. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much, you all that subscribe to our channel. I'm Afiabi Liberman, creator of Liberman Consulting LLC YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. For more of swing trading tips, will you please check the playlist in the video description. Thank you for your time.